Leading a startup team? Whether you're delivering a sugar rush, stocking coffee, or getting a regular delivery of snacks, Office Depot has solutions that fit every startup culture, from getting those first business cards and stationery to ordering fleece pullovers with your new logo. To learn how Office Depot and the California Technology Council have partnered to bring you savings on all of these startup essentials and more, go to californiatechnology.org/member benefits. I'm Daniel Levine, and this is the Bio Report.
Following the election of Donald Trump as president of the United States, investors bid up biopharmaceutical stocks. It reflected a belief that a Trump administration will remove the threat of price controls on drugs and represent a friendlier regulatory environment at the FDA. We spoke to Amy Brown, senior reporter and author of the Vantage 2017 preview, about what's in store for the biopharmaceutical sector in the year ahead, what to look for, and why it may turn out to be a big year for M&A activity. Amy, thanks for joining us.
Thanks very much for talking to us.
We're going to talk about the new Vantage Report 2017 preview, the outlook for the biopharmaceutical sector in the year ahead, and what issues may be shaping investors' perceptions about the industry. Let's start with the election of Donald Trump. This is an event that biopharmaceutical investors appear to view positively. What did we see happen to stocks in the sector following the election?
Well, I think really it can be described as a bit of a relief rally. The result was certainly a surprise. I think everybody was pretty sure Clinton was going to win. And as one of my colleagues is fond of saying, Wall Street is always terrified of Washington and what they're going to do, particularly the Democrats. But I think Trump and particularly the Republicans generally are seen as much more pro-business. And really, it was a relief that perhaps some of the measures that Clinton was threatening weren't going to happen. As the report says, ever since Clinton put thumb to BlackBerry in the middle of 2015, fears about political action and drug pricing has really spooked investors. Her comments triggered a correction in equity evaluations, which is arguably still going on. So, a combination of that and the drug pricing concerns really made the sector an unattractive place to be for investors over the last 18 months.
Well, how big a threat were there of new pricing regulations under Clinton, and has that threat gone away?
Well, I think with any politician, what they say they're going to do and what they actually end up doing are not necessarily anywhere close. I think the threat was certainly perceived to be greater under Clinton. She actually vocalised some measures, whereas I think Trump still very much remains an unknown quantity. They've both raised the prospect of giving Medicare the right to renegotiate drug prices, although whether that will actually ever get through, I think, is another question. But I think, realistically, with drug prices, there are so many parties involved in the US system. You've got the manufacturers, the pharmacy benefit managers, the insurance companies. What any one thing, any one person can do it still remains to be seen. It's probably, as someone who I quoted in our report said, it will be an iterative process that will have to take place in small steps. But I think what certainly will happen is perhaps aggressive political rhetoric will dim as long as no one does anything particularly outrageous, and everyone thinks that the Trump and the Republicans will be perhaps more benign. The issue certainly isn't going to go away. I don't think anybody expects that.
There's been some discussion that a lead contender to head the U.S. Food and Drug Administration under Trump would dramatically want to change the path to a drug getting to market by establishing only safety and dropping the requirement to demonstrate efficacy. Yesterday, we heard that Scott Gottlieb is a lead contender. Even if we don't see anything radical, what's a Trump FDA likely to mean for this industry?
Well, I think that's probably another reason the stocks went up. I think, he talked a lot about shaking up the FDA, and I think both of the contenders you mentioned, Jim O'Neill and Scott Gottlieb, have both advocated, faster drug approvals, and both talked about, regulations as hindering innovation. So I think there's a lot of expectation that the FDA will perhaps at least the tenure its approach to drug approvals will become faster, and I think there will be a lot of political pressure for it to do that. Again, I'm sure there's a lot of people at the FDA who don't want that. So the extent to which things will get faster, again, remains to be seen. Maybe we'll see a loosening of regulations. I don't think anyone could advocate less of a focus on safety. Everyone still remembers Biopharma. Maybe a more focus on accelerated approvals. I think that's certainly something that Scott Gottlieb talked about. That was certainly time with the Cures Act that has just been passed. Overall, hard to say until we know the final candidate, but it does seem likely that there will be a shift in tone at the FDA over the next few years, and I bet investors again are assuming it's going to be an industry-friendly tilt.
Another bet investors may be making here is that a Trump administration may create a U.S. tax repatriation holiday. What's the likelihood of that, and what could the impact be on M&A activity in the sector?
Again, this is something that was talked about by Trump, and I think another reason for investors coming back into the sector. The action will probably be widely supported by the Republicans again, perhaps not so much by the Democrats. Last time we had a tax repatriation holiday, I think there was restrictions on what the money could be spent on. So companies were prohibited from using it for executive compensation or stock buybacks. Although in the event, I think much of it actually went that way. People are expecting some rise in domestic acquisitions should this happen. And it's also interesting to see a lot of the companies with the biggest kind of offshore cash piles have the biggest desire or indeed need to buy. You've got Gilead is supposed to have 16 billion offshore, about 60% of its total assets. And Lilly now, again, quite after their Alzheimer's blow up, they've got 7 billion offshore. So we could see people looking inside. I think it's interesting to see that the Johnson & Johnson approach to Actelion has happened now. Johnson & Johnson, by our calculations, they hold almost all of their cash offshore. They've got about 38 billion, but yet they've gone after a European target. Maybe they don't see a repatriation holidays happening, or at least not for some time, or maybe they don't see any US targets they like. But I think the other thing to remember with this is that these big companies, they're still able to raise a lot of money. They can still pretty much buy what they want, repatriation holiday or no. We saw Sanofi selling negative interest bonds this year. People are paying to lend the money. Arguably all this offshore cash isn't actually holding anything back, but we'll definitely be watching that one.
So while Sanofi may be able to get negative interest bonds, smaller companies are not looking at a finance landscape that's as encouraging. What's the outlook for venture capital investment and IPO activity in 2017?
I think IPO activity is definitely calmed down from late 2014, 2015. This year was a lot quieter. I think people are expecting next year to be similarly relatively quiet, I guess. Again, I think last year it was a function of a lot of investor money exiting healthcare. A lot of reporting with a lot of money coming back into the sector now. So maybe a few more companies will be able to find support. Although, I think there's also an argument to be made that, some less robust companies arrived last year, and the problem is that drags down sentiment towards the sector, and perhaps they don't perform as well. Venture funding, on the other hand, is still doing really well. A lot of the funds restocked in the last few years, and they're still going to be investing very enthusiastically next year. When we saw a kind of a general dip in overall venture funding last year, I think we're on track to be about the same of 2014 this year, about 7 billion probably invested into healthcare private companies. Because of course we've lost the crossover funds who kind of came on board to support all the IPOs. So overall, as a smaller company, I mean, life's always harder when you're a smaller company, isn't it? It's always harder to raise money. But, if you're a company in an innovative area, promising real improvement in a therapy area, there's a lot of money to be had out there at the moment. It's, the venture funds are still optimistic. It's interesting also, some of the European funds I spoke to for this report were saying that, there's a lot of US investors over here in Europe now, because the US has become so competitive, particularly on valuations, that the US venture firms are looking in Europe where valuations are typically not as high. So there's a lot of competition for interesting private company investments in Europe now. And I can't see how that is going to change next year.
You mentioned Lilly a moment ago, which recently had its closely watched Alzheimer's drug fail in late-stage testing. What's the outlook for new drug approvals in the year ahead?
Yeah, we've got some pretty big ones on the horizon. Roche should be launching its new MS drug next year, Ocrevus. That will hit on approval before the end of this year. That's like the last big approval we're waiting for in 2016. I mean, that looks like it should sail straight through. The other big one is Sanofi's dermatology antibody, dupilumab. A little more controversial, that one. They've had some manufacturing problems at a few some of their sites. So I think there will certainly be some nervousness around that one. And of course, we've got a few more IO drugs. We've got the AstraZeneca one coming next year. Among the smaller ones, we're going to have the first two CAR T therapies coming up to the FDA. We've got the Kite and the Vantage that they're going to file. So they'll be going up against regulators. That'll be interesting to watch as well, particularly if changes at the head of the FDA do happen. Maybe there'll be more pressure to approve these kind of really experimental therapies than previously. But yeah, there's some pretty big approvals coming up this year that perhaps 2016 lacked.
And overall, are you expecting an uptick or a downtick in the number of drugs approved?
Well, it's a bit hard to say from the beginning of the year. I mean, there was a big drop this year in the NME approvals from the last couple of years. And we're still not entirely sure whether that's a blip. But as I said, there's a couple of big products that are, commercially very valuable this year, that should get more interest coming into the sector. I think. I mean, investors always like the big drugs being approved. I mean, I don't think there's any expectation there's going to be a big drop-off in kind of R&D productivity this year, but it's certainly something that people are watching out for after, 2013, 14, 15, we had some such massive drugs being approved. It was always hard to see how that sort of, how that could be kept up, really.
Remove efficacy standards and it won't be a problem.
Well, yes, that's one way to keep up from R&D productivity. Yes, drop your standards and then they'll be on the market.
Well, in terms of therapeutic sectors, where do you think the most compelling activity is going to be? What do you think will really capture the attention of investors?
Well, we've got the, I guess in cardiovascular, perhaps not as exciting as cancer, but we've got the big outcome studies from the PCSK9, Amgen, early in the year with Repatha, Sanofi towards the end of the year with Praluent. These kind of really potent cholesterol-lowering drugs, very expensive, and also obviously statins are all generic now. So these products really need to prove that they can help people live longer, because their cost is going to be really called into question if they're not actually helping people live longer. So that's I think that's going to be quite a seminal moment for the cardiovascular space. Again, in immuno-oncology, I think we're going to really start to see evidence of the potency of the checkpoint inhibitors in combination with chemotherapy or indeed other IO approaches. We've got AstraZeneca, got some lung data from them in the first quarter, and Bristol and Merck have got a lot of data coming up. I think we still really need to see the potential of these new IO drugs in combination, because I think a lot of people think that is obviously where the potential is. We don't really know what these combining these agents can do, both on efficacy and safety. So I think that's going to be very closely watched. And also, again, you mentioned the CAR T therapies. We really need to see more kind of like duration of response in these areas. Outside of cancer, we've got NASH. Still a big area that needs to prove itself. A lot of money gone into NASH. Gilead in particular, we spoke about Gilead earlier, and I think it will be interesting to see whether they really commit to this area in a big way. Put a lot of money into it in the last few years. But again, it's one of those therapy areas where there's a lot of potential in patient numbers and supposedly this unmet need, but there could be a lot of activity in that place, I think.
It's amazing to not only see Humira be the top-selling drug in 2017, but also one of the biggest growth stories. At what point do you expect it and other biologics to face real competition from biosimilars?
Yeah, I mean, that was one of the really surprising findings I found actually from running the data on next year for that Humira is still such an incredible franchise, really. You can really see why it's such a massive target for the biosimilars. When will it face competition? Well, AbbVie says 2022, but when you look at consensus forecasts, it looks like the sell side is factoring this is going to happen sooner, maybe 2020. Arguably not perhaps specific biosimilars against their molecule, but Pfizer is expected to launch their Enbrel biosimilar Inflectra anytime now. So, AbbVie is going to really have to start defending its position in the anti-TNF world. They've enjoyed very strong formulary positioning. The question is whether they're going to have to start cutting their price to keep that, even before direct pressure. I think Evaluate's got forecasts of about 500 million for Inflectra in 2022 for Pfizer. I mean, that's obviously nothing compared to Humira, but those forecasts are like to be conservative. So, I mean, I think the anti-TNF space is going to see a lot of pressure in the next couple of years. And I think that's going to be a real kind of like almost test ground. No one really knows how quickly biosimilars are going to carve a notable bit of the market in America. We've seen it in Europe, but these are very different healthcare systems and different payers. So it will be very interesting to see how the branded companies move to defend their brands, because I don't think you can underestimate that either. But also how much the biosimilar makers are prepared to discount to grab that share. But beyond that, 2018, I think is when we're going to really see the biosimilar threat mounting, particularly for the cancer antibodies like Herceptin. We still very much need to see how the approval and launch process goes in the US. But if Europe's anything to go by, there's certainly demand for the biosimilars.
What about generics? What major drugs are facing competition from generics in 2017?
Yeah, the small molecule space is perhaps not as exciting as the biosimilar space now. I think we've got Viagra finally going off next year after years of managing to extend its patent. But yeah, nothing, and Cialis as well, similar drug. Nothing major on the small molecule front really. This year we saw Crestor go, we saw some big small molecules. But I think 2017 it's going to be when the biosimilars really are going to be the focus of the erosion of the big brands.
You mentioned Gilead earlier. There's been a bigger alignment in the top 20 drug companies. Gilead has helped knock companies like AstraZeneca and BMS and Lilly off the list. But you expect Gilead's revenues to decline in the near term and say it'll need to look to acquisitions to build its revenue. What do you see happening there?
Yeah, well, I mentioned they've been really building up on NASH, which is definitely one to watch for them. But I mean, really, Gilead have been desperately trying to be something more than an anti-infective for years. But they've tried cardiovascular, they've tried cancer. Arguably they've been really disastrous moves. They haven't really made any footprint in any therapy area outside of their kind of strongholds of HIV and hepatitis C. And I think their management team is going to come under a lot of pressure if something doesn't happen. And the pressure on them to do a big deal it's got to be huge. We'll see what they do. Maybe it will try and stay within their anti-infective, and NASH is kind of similar to that. But I wouldn't be surprised to see them kind of really branch out, perhaps buy near-term revenues in a big move. Maybe helped by the repatriation move if Trump ever does it.
Overall, how good or bad a year do you expect 2017 to be for the sector? Are there clear characteristics of what will define winners and losers?
Yeah, I mean, most people I spoke to this report are very positive. US elections out of the way, whatever you think of the outcome, investors hate uncertainty more than anything else. So, at least they know who's going to be in charge in the world's biggest drug market. Ready to see what he's going to do, but overall, the US climate is arguably improving for industry. Debt is cheap. Equity markets are okay-ish. Unless I would have thought most kind of sensible ideas, are going to get funded next year. And you also have to remember, pharma, big biotech, even some of the mid-sized companies are still desperate to buy. They need to keep restocking their pipelines. And M&A is a massive driver of value in this market and a massive source of inflow of funds as well. Even Celgene, probably one of the most widely respected big biotechs now. It's the only one whose sales are growing on volume, not just through price rises. They're still a keen acquirer, and that says a lot. These companies have to keep their feet on the pedal, and that makes for good times for the sector, for the smaller end particularly. I guess things to watch. Watch Trump's appointment. You mentioned the FDA, that could throw a curveball. Who knows what the implications for that are in the long term? And of course, political rhetoric on drug pricing. That's not going to go away. And we spoke to people for this report who are really keen for industry to mount a proper defence against this. A lot of the drugs they're bringing do represent huge advances, and innovation needs to be paid for. And I think the drug industry, perhaps through past bad reputation, has been fairly quiet on that. So I think they need to kind of take control of that story in a way. As you're in the business of cutting edge, differentiated products, I think the climate's looking pretty good in 2017. Maybe if you fail even in this relatively friendly environment, then perhaps you're always supposed to fail. But no, overall, I think bar disaster or something else coming out of left field, 2017 is looking pretty positive. A couple of big surprises last year, so who knows?
Amy Brown, senior reporter and author of the EP Vantage 2017 preview. Amy, thanks for your time today.
Thanks very much.
Thanks for listening. The Bio Report is a production of the Levine Media Group. To automatically download this podcast each week, subscribe to our RSS feed or through iTunes or other podcast manager. To join our mailing list, go to levinemediagroup.com. We'd love to hear from you. If you want to drop us a line or are interested in sponsoring this podcast, send email to danny@levinemediagroup.com. Special thanks to Jonah Levine, who composed our theme music, and the Jonah Levine Collective, which performs it.